And great, without further ado, I want to introduce you to Justin Avellar and his colleague Vivian Cheng. Justin is a lawyer who specializes in helping small businesses and nonprofits and startups with a wide variety of agreements, corporate formation, and corporate governance support. Before starting his own practice, he honed his experience at an international law firm in New York City. He also serves on the board of a nonprofit, Seattle Economy, which oversees the Northeast Seattle and Shoreline 2 libraries. All right, thank you, Justin. Thank you for joining us, and please take over.
Thank you so much, Senya. Super excited to be here. I also have my colleague here, Vivian Cheng, who will be working on answering any questions you might have during the presentation that you send over the chat. So feel free to send any questions or, as Senya said, raise your hand. We're totally happy to cater the presentation to things that are the most useful for you. So let me get started. Okay, so this is the presentation on helping solo entrepreneurs and very small micro enterprises and people just getting started thinking about their liability limitation, how to limit their liability, how to basically not expose your own assets and risk losing everything because you want to start a really cool project, really cool business, and how to start by forming that business and actually get going properly. So we'll dive right into that. So first thing you need to do is get a business license. But before that, you need to form a corporate a company. But we'll get into the different types of companies. You'll want to think about different types of entities later on. But pretty foundational thing that you'll need is a business license. It's required if you have a plan to hire employees within 3 months, or if you're selling anything that would require collecting sales tax, you'll need a special account in order to remit sales tax to the Department of Revenue as well. They will guide you through that on the website. You will need a license if you are making anything more than $12,000 a year or more. So not a lot. And if you're required to pay any taxes or fees to the IRS, if you also are a specialty wood product processor or buyer. So the good rule of thumb is that if you're starting a business, you should just get a business license. You shouldn't think about whether you can avoid it because the fees are very nominal. And the state business license through the Washington State Department of Revenue is a one-time fee. There are certain types of add-ons or to the license, such as state license, city approvals, as if you're working in the city of Bainbridge. If you're working in Bainbridge Island, you'll get an endorsement through the Department of Revenue's state license that you're going to do business in Bainbridge Island. Other cities like Seattle have their own business license, not an endorsement through the Department of Revenue business license. So you would get license through a website like File Local, or you would paper file through which you could probably find on the City of Seattle's website. The act of obtaining a state business license is pretty straightforward. You would create an account on the Department of Revenue website, and then you could file it by mail or file it online. Um, I would definitely recommend, if it's at all possible for you, to file it online. They suggest a processing time of about 10 days, and that can definitely be faster depending on, the time of year and the type of business. It could be just a few days. But if it's by mail, you're looking at a month and a half. It takes about 15 to 30 minutes to complete the application if you have the information in front of you. Um, it's about $5 and can go up to 50 depending on if you're adding other things on, like if you're adding on a bunch of trade names. So say you have your business name, but you want to do business under a bunch of different names as well. You would add trade names, and that would add to the initial cost of the filing. But overall, it's a pretty nominal fee, and it's definitely something that you need and shouldn't try to avoid. So certain the you would need to file um, initially every quarter a tax report with the Department of Revenue, but you can change that to monthly or annual. It depends a lot on whether you're selling things that would you would have to remit sales tax on. So if there are any goods that you're going to offer, which probably will be, that's why you're here. Any piece of furniture that you sell um, would you would have to put sales tax on, and then remit that to the Department of Revenue. And the Department of Revenue in that case will decide whether you're doing it basically on a monthly or quarterly timeline. Um, they can be a little slow, but they will. You can use the chat or email or call them to get a more concrete answer. You don't need to, as I said earlier, you don't need to renew the state license, but you will need to renew endorsements for cities and city licenses annually. The city of Seattle, you have to renew the license with the city of Seattle annually. Um, that's a different City of Seattle's website. The City of Seattle uses File Local, as I said before, to process business license filings, taxes that you might have to file on businesses. Generally, if you're making under $100,000 in the City of Seattle, you're not going to be filing a bunch of tax, paying a bunch of tax in the city on your business, but you still need to file for your business license, and you still need to uh, file a tax return at least annually with the City of Seattle. You could have late penalties, penalties generally if you fail to file or file late. So it's something just to mark on your calendar. And I'm gonna skip ahead to corporate structures. So that is what you're before you even file a business license, you need to figure out what kind of business you are and then create that business. So if you didn't do anything, if you just got a business license and had a business name, but you didn't formalize the creation of your business with the Washington State Secretary of State's office, you would be what's called a sole proprietorship. And that's just means that you have no formal business structure and it's owned by one person. Everything all your income and loss is filed through your individual tax return. This is the easiest and fastest way and least expensive way um, to form a business because you're doing very minimal amount of paperwork, but you are responsible personally for the debts and liability of the business if there are any. So if anyone gets injured, there's no business to shield your personal assets. We'll go back to legal risk on that later, but most businesses that are actually getting into selling things should not be sole proprietorships because of the risks, that the liability risks that it contains. Most small businesses will want to become LLCs, limited liability companies, and because it is much simpler to create than and maintain than a corporation. Corporations have more reporting requirements than LLCs, and are taxed in a different way. If you are an LLC, the members are not personally liable for generally not personally liable for what happens at the company level. So if somebody's injured doing something for the company, or one of the products is defective, it's harder to go after someone's personal assets than if you were using a sole proprietorship. Those same rules apply to corporations too, but LLCs are much easier to set up. And if you are a single member LLC, you would still be paying income tax as normal. You would just have this company that is basically shielding you from liability. So easy to set up. Minimal annual report is very minimal compared to a corporation. You just have to do it annually with the Secretary of State's office, and it's about $70 or $80 if I remember correctly. So partnerships are you can have multi-member LLCs, so that would certainly be easier than doing a partnership and less liability. A partnership, each partner could be liable for the things that they have done. Partnerships are a little more complex too. It's more of something that is used in like types of professional professional firms and organizations where people are providing professional services, professional license services like legal services or medical services that would have different liability rules in those instances. So yeah, generally not something that you would want to think about. The corporation you can use, it would have similar liability protections as the LLC, but it's just more work. And you're taxed differently. There's a potential for you to save taxes by using a corporation, but you can also file a form with the IRS to be taxed similarly to a corporation and still be an LLC. So being an LLC is definitely the easiest way to go. Co-ops, they're really for very specific use cases where it's just like if you're designing something to share goods or to buy things to then share buy things at discount and then share with the community of co-op members. The rules are different, and it's probably not going to apply to you, so I would suggest not thinking about it. Nonprofits, I don't know if any of you are thinking about becoming a nonprofit. Okay. City endorsements uh, are simply things that um, if you are in the city of if you are working in Bainbridge Island, instead of getting a city license, you through the file local or any other type of website that Bainbridge Island might be maintaining. Bainbridge Island has worked out with the state of Washington that all you have to do is add basically an add-on or endorsement to your state business license that you are going to be doing business in the city of in on Bainbridge Island, which is also a city. So that's all it is. And so yeah, nonprofits probably not relevant in this instance. If you are thinking about a nonprofit, no, that is not going to be owned by you. You cannot. It's not meant to make profit, and it's meant to be owned by the community. So if you're looking for something with ultimate, or you have ultimate control, you can be removed, and you won't own anything when you are removed. You won't have anything that's yours at the nonprofit. So in these instances where you're thinking about just starting a micro business, micro enterprise, it's probably going to be an LLC. So going back to liability, the point of part of the point of some of these business structures is to minimize the liability that the owners could face. Say somebody comes onto into your warehouse and there's a puddle and they slip in the puddle and they break their leg. Then, because we're a very litigious society, they sue you. If you're a sole proprietor, they can come after your personal assets. If they win in court, they could financially destroy you with the with penalties, basically damages. By having say an LLC, for example, it creates this sort of shield of liability. So that person who, if it works out correctly, if you've done it correctly, if that person slips and falls, breaks their leg, they can sue the company, the LLC, but they can't generally come after you. Now, how do you maintain that? Well, you have to show to a court that you are, if you were sued, you'd have to show to a court that you are not, that your personal assets are separate and from the business's assets. That means you have a separate business bank account. That means you're not using your personal credit card, your personal debit card, or your personal money to buy all these sorts of things for the business. You're not really mixing assets together in a way that would be so confusing, so that a court would think, there's no real separation between the business and the person. So therefore, the court should treat them as the same thing. So it's very important that you have a business bank account, that you use the money that goes into the business bank account to pay for business expenses. You can loan the business money, absolutely, and you probably will need to if you're starting up to have access to capital, but it's important not to just have that sort of money just washing back and forth. And you can also get money income can come to you out of the business, but it's trying to maintain a separation between your business and your individual accounts that will make a difference in the long run. So now we'll go a little more into what these sort of risks are. Like I said, if you invite someone into your premises, if there's a trespasser and they slip in a puddle, they don't have as much ground to successfully sue you. They can potentially still sue you. It's very easy to sue someone in the US, but they are much less likely to be successful. And if you are having a business with open hours, you are inviting people in, and you have a different level of care that you owe to that person. So your business must be maintained in a safe manner. So floors can't be super wet and slippery. Things can't be dangerous in ways that people would who are just going into the business in a normal and expected way uh, could be injured. So, you can't have like something that could impale somebody easily out in the business. If you don't have to complete baby proof your business, but you have to make it safe for somebody to walk in and look at your stuff if that's what you're trying to do. If you don't have a storefront and you're not selling goods, you don't have that issue. I don't have that issue because I don't have an office, so people aren't coming over to do business at my house. So I don't have that sort of liability risk as part of my business. You also owe people um, the duty of care, that same sort of obligation to provide something that's just generally and reasonably safe to use when you're selling goods such as furniture, um, or you're selling or lending tools. So I don't know if you remember, IKEA was sued a couple years ago because children were climbing up on dressers and the dressers would fall over and hurt, injure, and maybe even kill small children. Um, I the people suing IKEA claimed that IKEA was not selling safe furniture because of the way it was constructed. Now, if you ever buy anything from IKEA, like a dresser, you'll notice that it has big warnings about anchoring its products into the wall, and will usually come with anchoring with the tools, with the supplies needed to anchor it's the furniture into the wall, if it's a dresser. So that's what makes, for them, for that instance, for their furniture to be very light, that makes that furniture safe enough that it meets their obligations owed to their customers to make things that are reasonably safe if used in a manner that's generally expected. The same thing goes for tools. If there are things that you're lending to people, people will have should have can have an will have an expectation that if you lend them a circular saw, that it will not catch fire if used normally and properly. So, or that the blade won't come off, or reasonable things that won't happen. You aren't required to, if somebody uses it normally and then hurts themselves, cuts their finger off, that's not on you generally. It can get complicated, but if they're taking the tool and misusing it, that's not necessarily your fault, but it is your obligation to make sure the tool is safe for use in its normal manner. The same thing goes for offering expertise. If you are advising somebody on how to fix something, or how to repair a piece of furniture, or how to repair a tool, you're showing yourself as being an expert on that to somebody, and they're taking your advice, thinking that you have expertise on how to repair that thing. So you have to make sure that the advice that you're offering is sound and reasonable, or let them know that you're not an expert, and make them sign a waiver saying that they acknowledge that you're not an expert, basically, and that you're just giving them assistance in any way, but you're not claiming expertise, because expertise gives you an obligation to make sure that you're providing things in a reasonable and way that follows best practices. So if you don't know what you're talking about, don't offer the advice, because it could get you in trouble. So additional examples are if you're having furniture repair and somebody's injuring themselves, preparing the furniture for you, um, as an employee or volunteer, or somebody's injuring themselves using the advice that you give. You'd be very careful, and it's generally a good idea to have a good waiver in place. People won't want to sign a waiver waiving their rights to sue you if you're selling goods, because that's not normal practice. People expect goods to function normally and not hurt them. So, but that's more if you're having an employee come in, or a volunteer, or somebody taking advantage of a sort of clinic or something that you're offering as a service, then a waiver is, it could be a good idea. So another thing that people mentioned being interested in is insurance. So we've listed general liability insurance and basically fire insurance. So general liability is for slip and falls. So if and other sorts of workplace accidents and things that could happen at your business. So say somebody slips in a puddle, somebody jams their finger in a door, something collapses on them from a pallet. All those sorts of things within reason would be would be covered by your general liability insurance, your business liability insurance. It's still, you still have those obligations to maintain a reasonably safe place for people to come into, if that's what you have, if you have a place for people to come into. If you have a hazardous place, people, your insurance companies generally won't give you a policy, or they won't pay for your claim, because you didn't fulfill your end of the deal by keeping it safe, generally safe. So to reduce the risk of accidents. Um, Something that you would also want to consider is fire and insurance, fire coverage. This additional liability um, is and property insurance, because that won't be covered by your general liability. General liability, think slip and falls, and then property insurance would be the physical inventory and other property that you would have on the on the premises that you're selling, because your inventory can be quite expensive. So it's very valuable to insure it, or at least consider the costs versus the benefits of adding that insurance. Some insurance companies will offer both. You would have to work with an agent to help think about those sorts of things. Where are we doing with questions? What would generally cover renters insurance? Uh, Senya, what do you mean by generally cover renters insurance?
Like for example, so what are other types of insurances there are? Like I know that if, for example, we rent a place for our business and someone steals something like, as you mentioned, like burns down, or something is happening in the space.
Yeah.
Is that a separate insurance? What that insurance is? And a adjacent question is that if, for example, we work out of our garage,
Mhm.
and like we have a furniture flipping business and we work from out of our garage, um, and we probably, if like we have a house insurance, would that cover a part of our business, or how to
Yeah.
navigate that situation? So I guess it's like a two-part question.
So, um, property for the inventory on your business property, you would just you would talk to your agent about having additional um, uh, casualty insurance that covers inventory and stolen goods and property damage. They would that's pretty standard thing to have for businesses that buy inventory and sell it. If you're a tool library, which is not for me what I'm involved with, you don't necessarily have insurance on things that are donated to you because uh, the cost of the insurance might outweigh the benefit of getting insurance money on tools that were donated for free. So you'll have to weigh the costs and the benefits, but it's definitely something worth speaking to your agent about when you're getting a general business liability to add on the property coverages. For doing things out of your house, it's very important to read your homeowner's insurance policy. Many of them will not cover things that you're doing through a business. So if I were to start seeing clients in my home, any incidents related to that would not be covered. If I started selling stuff out of my garage and then somebody stole a bunch of that stuff, that would probably not be. I mean, I haven't read my homeowner's insurance policy in a minute, so I'm not 100% certain, but I'm fairly certain that my policy would not cover any losses related to the business. The same thing for the general liability. If I have homeowners insurance, I do, and uh, or renter's insurance, a lot of it will cover, or at least give you the option to cover, people coming over and then hurting themselves. And that's definitely coverage you want to have. That only applies in circumstances where you are not running a business. So it probably applies if you have a contract worker, such as a gardener, that comes over and hurts himself. But if you're running a business and somebody comes over and hurts themselves, that they won't cover you, most likely. Check your policy. That case, you would also want general business liability insurance. So it seems kind of weird to have two policies covering your house, but they are covering different circumstances. One is only covering personal, and one is only covering business, and they don't really overlap. Um, if you're certain things like home office and thing that sort of stuff would generally fall under personal, like if you just have a computer and stuff, like a desk, that's still personal. Homeowners, renters. But if you are having people over selling stuff, then it's out of the house, then it's insurance, business insurance. Does that answer that question?
Yes, I was like, maybe a person can rent out to their business a part of their house, and that way that garage is already rented to your business or something like that. That was my thinking.
The renting is renting a part of your property to yourself is something that you would do for tax purposes. If you're trying to pay yourself as a corporation and take corporation deductions, it gets quite tricky, and it's best if you work with I would say a tax accountant on that, to maximize the potential revenue and maximize the potential tax savings on that. But it is not necessarily not necessarily needed to rent it for liability purposes. It's definitely more for tax purposes.
Got it. Thank you.
Mhm. Yeah. So another thing that I'd seen that people are interested in is HR management and that is that's a bit of a tricky question. So a bit of a tricky topic to manage as a small business, because the HR can be quite expensive, and it is hard to deal with yourself sometimes. If you are just starting and it's just you, or maybe you and a partner, you don't, I would say that you wouldn't necessarily need to pay for HR services, because there's no employees. Um, if you're thinking about having an employee, then you might want to consider having resources for the employee. You you might need at that point payroll software. You probably do need payroll software. So some sort of you either would do it with your accountant, and maybe through QuickBooks, or I think FreshBooks and others offer payroll services. And that way you would sort of have a bit of HR management in there, but it sort of depends on what else you're trying to offer. If you're trying to offer healthcare plans, you would definitely need a benefits administrator. And so in that instance, if you are a member of any of the local bars, chambers of commerce, they offer what's called they offer access to what's called Business Health Trust. Business Health Trust is a company that helps small businesses and nonprofits get access to HR tools, HR documents, so policies and procedures, manuals at more affordable prices than bigger companies. Um, so you don't have to pay the same level as a company with 500 people. You don't have to pay to access that sort of software. You can get something that's a bit lower priced. They also offer access to healthcare plans, so you can, if you have 2 or more employees. So if you are trying to offer people healthcare, you can talk to business health trust about potential plans, and they can give you information on costs and how much you would pay, how much you would pay of the premiums, and work that out. What other businesses do is they basically offer people a stipend to pay for their employees to get access to healthcare through the healthcare exchange. And one, if you were to just give someone a stipend and say, go use this on healthcare if you want, that would be taxable as regular income to that person. What you can do instead is create what's called an HRA, or a health reimbursement account. And that allows you to put in tax-free that stipend into that special HRA, and then the employee can use it specifically for health insurance. And it's you it's different from an HSA, because you can't have an HSA without a healthcare plan. So this would be instead of the healthcare plan and the HSA. It would be just simply you basically making a stipend tax free. One company that I've looked at before is called Health Equity. The business opens the HRA, and the business pays a fee, generally about $75 a month, for access to those services from a place like Health Equity. I can pull that up in just a second. They, if you have to calculate, there's sort of a turning point where if you have just one employee, it might be better just to pay them a little more in the stipend and just give it to them in cash, and then they pay as part of their paycheck, and then they pay the taxes on it, and you don't have to pay the overhead for a company like Health Equity to maintain this plan for you. But once you reach a few employees, the tax savings for the employees it starts to make more financial sense for the company to use something like an HRA. And it's still cheaper and easy. It's still a lot easier to manage something like an HRA instead of a healthcare plan as a small business, because healthcare plans are complicated and a lot of work. And this is mostly just putting money into an account. So I've known of other businesses that have done things like stipends instead of paying and asking their businesses to telling their employees they can go get insurance instead of offering insurance. Some employees like getting their own plan so they can have more control over their doctors too. That's a personal preference, but in terms of ease for a small business owner with just a few employees, I would suggest an HRA over a healthcare plan. You can also set up things like a 401k with very little work. It's just a few forms. You can use a local bank, or you can use I use Schwab because I had a rollover from a previous employer there. It's not hard to set one up for yourself, and if it's called a solo 401k, and it allows you to save up to $15,000 a year, either before or after tax, depending on whether you choose a regular 401k or a Roth 401k. And that's a great way for you to save money on your taxes and save for retirement, and expand it into a regular 401k plan once you get employees, if you get employees and decide to get employees, because you'll be sort of ready to go with that sort of with those retirement options for employees. And then you can turn that over to either a benefits administrator, or you can manage it yourself. Sort of depends on what you want to offer. Another question that we had, yes, a single owned LLC can create a solo 401k. I know I am, because I've done it myself. And you would look up a solo 401k. I know Schwab offers it. I know Fidelity offers it. I chose Schwab because I have accounts there already, and it was so one login. But you'd have to choose whichever place suits your needs best. For tax information, if you're a single member LLC, the IRS disregards the LLC for tax purposes. They say they just look at the income and expenses, and you file this all as part of your regular individual income tax return. So if this allows you to file Schedule C with all the business deductions, if you have a home office or an office, you get to file deductions and get credits for that, and it is very helpful for your taxes. But you are filing as an individual. The same goes for if you have a multi-member LLC. You are being taxed as the multi-member LLC. If it makes $50,000 in net income, and has two partners, each member, each co-owner is viewed by the IRS as having net income from the two-member LLC of $25,000. They report that on their individual income tax return, minus any credits and deductions that they can take through the business. So it's pretty simple. It's pretty straight. It's not a huge change in what you're doing now if you're filing individual income tax return. It's definitely more complicated than if you're a W-2 employee, but that is the nature of being a small business. It's different if you've become a corporation because you're paying corporation income tax, and it's just more complicated. That's another reason why people prefer to use LLCs, because it's simpler. There are benefits to filing as a corporation. If you think that you can save, if you're making a lot of money, you could potentially save some by filing, being an LLC and filing this form. I believe it's called 8032, to be taxed as an S corporation. And that would allow you to take advantage of some of the tax benefits of paying about 10 to 20% less, of less on your self-employment taxes, which is Social Security and Medicare, and paying yourself a 10 to 20% as a dividend. You can't go too crazy with that because the IRS will audit you and find, and they generally don't like if you're paying too much to yourself as a dividend to avoid those self-employment taxes. Because it's not fair. So generally have to pay tax. It's always the moral of the story. Always pay your taxes. Always pay them on time. Don't try to avoid that. So partnerships are also taxed as the same way as an LLC is. Members are taxed, so it goes onto your individual return. Did anyone have more specific questions? So some of the, oh yeah, go ahead, Zenya.
Oh, no, just if we are to the end of the session, we could wrap up and refacilitate that. So yeah, are we at the end of the session, more or less?
Yeah, sure.
Yeah. So when folks registered, you had an option to select if you would like to have a one-on-one session with Justin that is gratefully provided by the grant from the Washington State Microenterprise Association. You can reach out back to me. I will also follow up with those resources if you don't have my email address, because I see folks who didn't initially register and received my welcome email to the session. But we'll be happy to provide you the link to schedule that free consultation, 1 hour consultation with Justin. And as I mentioned at the beginning of the session, we will share the recording and the slides from the session. Yeah, so that's what I wanted to kind of close with. But your slide also looked pretty full of resources. Do you mind sharing it back and telling us what was that?
Sure. Let me pull it up again. Just closed it. Give me a sec. Okay. So these are, this is a link to, and we'll send this out later. This is a link to the Department of Revenue on how to start a business. And this is, I believe, also from, oops. There we go. This is also from the Department of Revenue on applying for a business license. And Business Licensing Wizard is just a way to help you file for your business license through the Department of Revenue. And this is from Bank of America. on just some simple things to think about when you're trying to create a different types of corporate entities. So it gives you a little bit of pros and cons of each type, like what's LLC or partnership, and what are the pros and cons of each one. A little more in depth, similar to what we just covered. So you don't have to remember it all right now or have taken crazy notes. Occupational health and safety, employer responsibilities are more things that we didn't get into, such as workers' compensation. And when you actually have employees, what you have to do to keep a safe work environment so your employees aren't inhaling things like lead or exposing themselves to toxins or heavy metals while working in your workplace. Reasons why OSHA exists. So that'll be a resource for you, but probably not something that you need right away. Business health trust is what I was talking about with HR management and healthcare plans. They offer a variety of different types of options in terms of how, like, HR, you can they offer services through what's called Archbright, and you can buy different levels of services. So you can have more access to their specialists, or just get access to documents and templates, depending on what you pay. They also do 401ks if you want to set one up through them. If you have employees or thinking about having employees, they can potentially manage it for you. I don't know the pricing of those sorts of things through that company. In order to access Business Health Trust, you will have to, fairly certain you have to be a member of Chamber of Commerce. So maybe that's Seattle Chamber of Commerce, Shoreline Chamber of Commerce, West Seattle Chamber of Commerce. Just check to make sure that that's a benefit before you sign up, so you don't spend a couple $100s for an organization otherwise that you might not want to otherwise. And the HRA is what we were talking about, and that's through Health Equity, which is just one company that uses HRA, that offers an HRA. So you can look through it a little bit and think, and if you have employees and work on it and think about a solution for getting people access to healthcare without having to pay for having a whole healthcare plan set up just for you. And partnership tax information is just a Q&A page from the IRS on how partnerships are taxed, and the people are individually taxed through individual income tax. And that's just it can be a refresher if you want to take a look. And the IRS does have very useful information on LLCs and how they're taxing corporations and setting up businesses. So definitely check out the IRS's information as well if you're trying to think about how you'll be taxed. The IRS is the ultimate resource for that. So definitely get a look if you have any questions there too.
Thank you so much, Justin. Right now, you have a chance to ask questions that were not answered. But if we don't have any questions, I think we can call it a great session. I learned a lot myself. So thank you so much all for joining us today. And yeah, we're even ending it on time, exactly at 5 p.m. Go and enjoy great weather. And again, thank you for joining us, and we'll be in touch.
Thanks so much, everyone.
Yeah, thank you, Vivian. Thank you, Justin. Feel free to send me the slides today or later after tomorrow. Maybe that will be even easier because I probably wouldn't able to press. Oh, let me